Welcome to Market Brief After Hours. We are wrapping up a highly watchable day on Wall Street, where the major indexes finished looking relatively flat on the surface, but underneath there was a massive amount of movement. We saw geopolitical tensions flare up, oil prices surge, and some major shifts in the tech and currency sectors. Let's break down the key takeaways from today's session.
It was definitely a day of underlying tension. The major U.S. indexes essentially paused after coming off their best week since April. If we look at the final numbers, the S&P 500 slipped just 0.06% to close at 7,753. The Nasdaq Composite declined 0.32% to end the day of 26,605, while the Dow Jones Industrial Average fell about 61 points, or 0.11%, closing at 53,976. What we are seeing is investors balancing incredibly strong corporate earnings against some very real macroeconomic and geopolitical headwinds.
And those headwinds seem to blow hardest from the Middle East today. We saw a major spike in crude prices. What exactly is happening with the U.S. and Iran right now?
There is a lot of skepticism about whether the U.S. and Iran can reach any sort of lasting agreement regarding ship traffic through the critical Strait of Hormuz. Iran has indicated it is close to a deal with Oman to reopen the strait, but Tehran is flatly refusing direct talks with Washington. In fact, the Iranian foreign minister stated there is no possibility of restarting negotiations unless the U.S. addresses and compensates for what they call violations of the June Memorandum of Understanding.
And that directly contradicts some of the more optimistic comments we heard last week, doesn't it?
Exactly. Last week, Treasury Secretary Scott Bessent gave comments suggesting a deal was practically imminent. But then, over the weekend, President Donald Trump told Axios that the U.S. was only semi-negotiating with Iran, emphasizing that he wants to keep the economic pressure dialed up. He indicated he would rely on a naval blockade rather than airstrikes to maintain that pressure.
That back and forth is clearly keeping energy markets on edge. How did oil react to all of this?
It surged. U.S. West Texas Intermediate crude futures jumped about 5.1% to settle at $82.13 per barrel. Internationally, Brent crude rose 5% to settle at $87.72. Making matters tighter, the US Strategic Petroleum Reserve is under immense pressure. It fell by 6.1 million barrels last week to 298.7 million barrels. That is the lowest level we have seen since January 1983.
That is a historic low for the reserve. And meanwhile, we are seeing bond yields rise as well.
Yes, Treasury yields climbed alongside oil. The benchmark 10-year Treasury note yield gained more than 4 basis points to sit at 4.705%. The 30-year bond rose to 5.251%, and the short-term 2-year note ticked up to 4.241%. Investors are really bracing themselves for a massive week of economic data, specifically the Consumer Price Index on Wednesday and the Producer Price Index on Thursday.
It feels like everyone is trying to guess what the Federal Reserve will do next. How are traders pricing in the September meeting now?
The expectations have shifted quite a bit. Following an unexpected contraction in the July non-farm payrolls report, traders are now pricing in about a 52% likelihood of a rate hike in September. That is a notable drop from the 67% probability we saw just a week ago. The inflation data this week is going to be absolutely pivotal in tipping that balance.
We have a lot more to cover, including a deep dive into global markets, some highly technical moves in foreign exchange, and the day's biggest stock movers. But first, let's take a quick break. Stay with us. Welcome back to Market Brief After Hours. Let's shift our gaze globally. European markets seem to hold steady today, despite the geopolitical noise. How did they fare?
Europe essentially paused near its record highs. The Pan-European Stoxx 600 edged up a tiny 0.03%. Regionally, Germany's DAX was up 0.02%, France's CAC 40 rose 0.13%, while the UK's FTSE 100 bucked the trend, settling lower by 0.35%. Switzerland's SMI was a bright spot, gaining 0.61%.
Was there any notable economic data coming out of Europe today?
Yes, Eurozone investor confidence actually returned to positive territory for August. The Sentex Economic Sentiment Index jumped to 0.9, up from minus 3.1 in July, which was much better than the minus 0.7 analysts expected. However, Germany is facing some structural trade challenges. Preliminary data shows Germany's trade deficit with China widened in the first half of 2026. German exports to China fell over 12% year-on-year to just under 37 billion euros. To put that in perspective, back in 2021, Germany sold over 104 billion euros worth of goods to China. Chinese firms are actively cutting reliance on European imports. Meanwhile, in Norway, consumer price inflation accelerated to 3.0% in July, up from 2.7% in June.
Fascinating structural shifts. Now, moving over to Asia, we saw some pretty green screens, particularly in Japan.
Japan's Nikkei 225 had a fantastic session, closing 2.22% higher, largely driven by tech and semiconductor equipment makers. Tokyo Electron rose 4.1% and Advantest jumped 6.4%. Interestingly, though, Japan's two-year government bond yield hit its highest level in more than 30 years, reflecting shifting monetary expectations there.
And what about China and the rest of the region?
Chinese stocks rose, led by consumer shares, though tech was a bit soft. The Shanghai Composite rose 0.7% to a three-week high, while the Hang Seng in Hong Kong advanced 1.1%. Data showed China's consumer and producer inflation both cooled in July, so investors are keeping a close eye on Beijing's next policy moves. In South Korea, the Kospi closed up 0.65%, though heavyweights Samsung and SK Hynix gave up early gains to finish slightly lower. Down under, Australia's S&P ASX 200 fell 0.3%, dragged down by Westpac after a sharp drop in mortgage applications. However, Sunrise Energy Metals was a massive standout, jumping 29% after securing a $400 million debt investment from the US to develop a major scandium mine.
That is a massive jump for Sunrise. Let's transition to the currency markets because we have some very distinct technical patterns forming across the major pairs. Let's start with the euro and the pound.
The Euro-USD pair retreated slightly, closing down 0.15% at 1.1541. It tried to test the 100-day simple moving average at 1.1568, but faced rejection near that session high of 1.1566. Technically, the pair is in a bit of a middle ground. It is holding above its 50-day moving average of 1.1470, but remains below the 200-day average of 1.1627. If it can close above that 100-day average at 1.1568, we could see a run toward 1.1627. Otherwise, a drop below 1.1540 might trigger a deeper pullback.
And the pound seems to be showing a bit more strength?
Much stronger. GBP USD closed up 0.12% at 1.3508. It is comfortably trading above a major cluster of moving averages, the 50-day at 1.3366, the 100-day at 1.3407, and the 200-day at 1.3404. This recent cross above these key averages confirms a strong shift in momentum. As long as it holds above the session low of 1.3483, the bias remains firmly bullish.
What about the Japanese yen? We saw some headlines about the joint intervention losing its teeth.
Yes, the yen has given up roughly half of the gains it made during that historic joint intervention. Many institutional investors are saying that the lack of a unified voice among global central banks really diluted the market impact of the intervention. If you look at the USD JPY pair, it closed today at 159.30, up 0.97%. The daily candle was a strong, large-bodied bullish candle closing near its peak, which shows aggressive buying momentum. Technically, the dollar decisively reclaimed its 200-day simple moving average against the yen at 158.06. However, it is still trading below the 100-day moving average at 159.98 and the 50-day at 161.16. So, while the buyers are stepping back in with force, there are still some major overhead technical hurdles for this pair to clear.
And the Swiss franc?
USD CHF advanced 0.32% to close at 0.8101. It successfully defended its 50-day moving average of 0.8058, keeping its broader upward trajectory intact.
Now, let's look at commodities. Gold and silver both had incredibly strong sessions today.
They did. Gold closed up 1.08% at $4,388, putting it right up against its 100-day moving average of $4,400. This V-shaped recovery from the late July lows shows aggressive buying, but that $4,400 level is going to be a tough nut to crack. If it breaks above it, we could see a run to the 200-day average at $4,483. Silver was even more explosive, surging 3.61% to close at $65.76, breaking clean out of its recent consolidation range and clearing its 50-day moving average of $62.39.
While precious metals surged, digital gold, Bitcoin, had a rougher day. It fell below $64,000, down about 2%. What was behind that slide?
It looks like corporate selling pressure. Mara Holdings filed its quarterly report showing that they aggressively managed their digital assets in the first half of the year, selling off roughly 23,093 bitcoins for a massive $1.627 billion. As of late June, they still hold over 35,000 bitcoins, but the market reacted to the selling volume, and Mara shares fell 6.4% to close at $9.44. Last week, Bitcoin Treasury firm Strategy reported sales of 1,690 Bitcoin, generating $108.6 million in proceeds at an average sale price of $64,262 per BTC. This substantial revenue was fully utilized to repurchase over 1.15 million shares of its STRC variable rate preferred stock through its digital credit securities repurchase program.
Let's wrap up with some of the individual stock movers on Wall Street today, because we saw some absolutely massive double-digit gains due to mergers and acquisitions.
It was a huge day for M&A. MarineMax shares skyrocketed 46% after agreeing to be acquired by Blackstone Infrastructure's Safe Harbor Marinas for $53 a share in cash, which values the deal at $1.5 billion. Then we had Varex Imaging, which surged 48% after Teledyne Technologies agreed to buy them for $18.90 a share in cash.
And on the software and tech side?
Datadog was the star of the S&P 500 and NASDAQ 100, closing up more than 11%. On the flip side, Monday.com dropped over 4% after issuing a third-quarter revenue forecast of $370 million, which came in just below the consensus estimate of $372.8 million. And of course, Intel was a major drag on the broader market, falling over 4% after announcing plans to offer $15 billion in common stock.
An incredibly active day across all asset classes, from stocks and bonds to currencies and commodities. As we head into the rest of the week, all eyes will undoubtedly remain on those upcoming inflation numbers. That is all for today's episode. If you find this useful, please follow Market Brief After Hours. We will see you right back here tomorrow.